Okay, hi everyone. Let me know if you can see my screen and if you can hear me loud and clear. Okay, I'm going to have to pause for a while because my other monitor is not working. If my monitor isn't working, I cannot um, see your chat. Give me a moment while I figure this out. Okay, it's working now. Okay, everyone can see me clearly, right? Everyone can see me. My screen is working fine. Okay, in the meantime, can I check, um, how's everyone? Where are you guys from? And also want to find out how long you've been trading for. Let me know in the chat box. Anyone? Can you guys hear me loud and clear? If you can, just say something in the chat box, even hello. Even just a hello will do. At least I know. At least then I know that you guys can, actually hear me. Okay, cool. I'm just gonna proceed then with today's webinar. Again, don't be shy. Just talk to me in the chat box. I want like today's webinar to be, relaxing and conducive, and we want it to be interactive. Okay, so hello everyone. Welcome to IronFX webinar series. Right? I see a lot of people still joining actually. Hi Justin, hi Oliver, Tuswasi, Vivian, Juha, Brian, Ross, Junai, Junan, sorry. Hi everyone. Okay, I'm just gonna start today's webinar. I see the attendance is still moving. Maybe we'll just give everyone else like one more minute to settle in and then we can start. Okay, I think that should be everyone. Okay, again, hey everyone, welcome to today's webinar hosted by IronFX. We are going to do a educational webinar today. We are going to talk a little bit about the topic in a while, but in the meantime, let's go through the disclaimer as usual for those who have been on our webinars. You know how this works. Please take our webinars as educational only. Do not take it as trading advice. Do not take it as investment advice. Please take it only as educational and nothing else. Okay. Our risk warning from IronFX: products are traded on margin and carry a high level of risk, and it's possible to lose all capital. So please do not overtrade. These products may not be suitable for everyone and should ensure that you understand the risk involved. Okay, cool. Okay, moving on to next slide. Okay, I'm gonna introduce myself. For those who don't already know me, my name is Cassandra. Hello, Alex. Welcome to our webinar today. Hello. Bye. Okay. Our webinar for today will be by me, Cassandra. For those who don't already know me, my name is, you can call me Cass. I am basically a investment analyst and a prop trader at an award-winning research firm. Okay, so the firm that I'm in, Rocket, is a finalist for the best Forex research and best equity research for multiple years. I personally am managing 300,000 US dollars on my own personal account, and I have passed FTMO twice. I've also passed my Forex fund once. For those who don't know what that is, it's basically um, a Okay, I see you guys talking now. So sorry. I was under the chat box. Juha was saying chat disable. Yes, I can see it. Anonymous attendee trading 5 years from Finland. Hi from Finland. Okay, you guys can just tell me on the Q&A box and then I'll just talk to you there. So sorry, I didn't realize the chat box was not working. Let me see if I can disable it on my side. Nope, it doesn't. Disable, enable. Okay, you know what? It's okay. Just talk to me on the Q&A section and I'll reply to you guys accordingly there. I was wondering why you guys are not talking to me and I wasn't sure if you guys can hear me or not because no one was replying. So thank you so much, Juha, and thank you so much for whoever is responding to me. It gives me certainty that I'm not talking to myself. Okay, so yeah, back to who I am. I have passed FTMO twice and my Forex fund. Thank you, Alex. Thank you so much. My Forex fund one time, but anyways, my Forex fund's already closed down. These tests I'm talking about are basically prop trading tests. Okay, so for a trader to pass a prop trading test, you would need to do a profit of 10% within the month without a drawdown of 5% profit. Oh wait, without a drawdown of 10% loss. So at the end of the 30 days of trading, you need to have made 30%, 10% profits to have passed the test. So I have passed this test multiple times, 3 times in fact, and only 0.5% of traders ever pass this test. It is a very hard test to pass and I've passed it multiple times. So the reason I'm telling you this is so that you guys are relaxed and you guys can chill and know that you are in good hands. Okay, so whatever I'm teaching you guys is things that I personally use in my own trading as well. Okay, let's move on to today's webinar. We are going to talk about Fibonacci. Can you guys let me know in the Q&A box, not the chat box, okay, the Q&A box, if you guys, oops, sorry, attended the last webinar, which is the Fibonacci Masterclass Part 1. This is Part 2. Let me know in the chat box if you guys have attended, because if you did not attend, then I would want to focus a bit more on the recap. If you guys have attended it, then it's okay. I'll just do a really quick recap on Part 1, because if you do not understand Part 1 and Part 2, you will not be able to follow the rest of the series. You guys got me? You need to understand Part 1, Part 2, Part 3, Part 4 to be able to master Fibonacci on its own. This is a very simple topic. It is not a hard topic to master, but I can tell you this topic, if you do master it, I mean, yeah, Fibonacci, if you do master Fibonacci, it will help you tremendously in your trading. I personally have made so much wins, so many wins and so much profits from Fibonacci alone. I haven't attended part one, not yet. Okay, did not attend. Okay, so I think those that have replied did not attend. The rest of you, no response. So I'm not sure if you guys have attended or not, but because those who have replied did not attend, I am going to do a recap, focus a bit more on part one. I can do that because this webinar is 1 hour long. This is a very simple topic, simple but powerful. Please, 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 I urge you guys to master Fibonacci if you can. I have been trading for coming 9 years now, and Fibonacci is the one that helped me become profitable. Okay, so please master Fibonacci. Okay, so again, before we start the webinar, I need to do a quick disclaimer again. Please take today's webinar as educational. Please do not take it as trading advice, investment advice, or whatnot. Purely educational. We are here to learn and grow as traders. Okay? Okay, moving on. Our agenda for today, which is the overview and the recap. I was going to do like a very quick overview and a very quick recap, but seeing that you guys did not attend part one, I'm going to spend a bit more time on that. We're going to go on to what is Fibonacci expansion. This is part two. Okay, Fibonacci is broken down into 4 parts. Okay, 4 parts. Part 1, which was Fibonacci retracement, was done a few weeks ago. Part 2 is today. Part 3 will be next week or the week after, and then part 4 will be like next month, most likely. Okay, we're gonna do how are they different from Fibonacci retracement, which is the same as the one, which is part 1, finding Fibonacci confluence, and then finding reversal trading strategy. So, and then if we have time, only if we have time, we will do intensive practice where we go into trading view, and I can show you guys how to use Fibonacci. Okay, so this is a checklist. I don't know if you guys want to take a picture, a screenshot, or whatever it is of this. This is how I usually trade. Whenever I trade, I will ask myself, are there any horizontal levels? Please take note, every time you guys are on this webinar, sometimes it's a different speaker, okay? So when it's a different speaker, there's a different style of trading. Everybody trades differently. I am just sharing my style of trading, okay? So I'll ask myself, are there any horizontal levels? Are there any pullbacks? Are there any trend lines? Are there any channels? Are there any chart patterns? Any dead crosses? Any natural moving average, stochastics, correlations, any reversals, any breakouts? And then I apply Fibonacci. Fibonacci applies to the support and resistance basically, which is the horizontal levels. Okay, so please master Fibonacci. If you do not master Fibonacci, you cannot even take the first line, which is, are there horizontal levels? Okay, you can, if you use support resistance alone, it may be good enough, but may not be strong enough. Hey, so overview and recap. Let me see, what time is it now? Okay, it's 5:14, 5:15 here in Singapore. We have 45 more minutes. If you guys have any questions, just ask in the chat box, okay? I will try my best to answer as I go so that we don't waste too much time. But please ask me questions. If there's anything you are unsure, just ask. Do not be shy. If you are shy, you can put yourself as anonymous. Okay, this is very, very important because if you don't ask questions, then it will, the things that you do not know will not be answered, and then it will stop you from growing as a trader or as an investor or whatnot. Okay, so just ask, don't be shy. There are no silly questions here. I will answer all questions to the best of my ability. If I cannot answer you, I'll just tell you. If I can, I will tell you as well. I'll just give you the answer. Okay, so let's do a quick recap. Last week, you guys learned retracements. Not last week. I think it was 2 weeks back. It wasn't by me, it was by another analyst. Okay. I'm taking over from him, so I will teach you guys. I need the pen tool. Okay, so for those who don't know what retracements are because you didn't attend the webinar last week, retracements is basically going on the chart, looking for a pattern and drawing, taking the point and another point and basically just drawing a line to see what levels come up. Okay, so I know that's confusing, so let me show you. You go to the chart, you look for a pattern that looks like this. Do you guys see it? If not, like this. Do you guys see the pattern? The pattern basically is a V. It is a V where the back of the V is shorter. So it's basically, it's kind of like a tick sign, like a Nike tick sign, basically. It is basically like a Nike tick sign, but inverted, right? So like mirrored, okay? So it is a V where the front is longer and the back is shorter. If it's the other way around, it is a opposite V. It is like this, but the front is longer and the back is shorter. Okay, so let's look at the first example. Let's look at the first example. Can you guys see that there is I'm going to use a laser pointer, a V here. Do you guys see that there is a V? Are you guys following my pointer? There is a V pattern here. A V pattern where the back part of the V is shorter. Okay, so this is called when we see such a pattern, we are able to draw a Fibonacci retracement. Okay, so on TradingView or whatever chart you are charting, use the Fibonacci tool to pull the first point. You're gonna mark this first point here. You're gonna pull it all the way to here, and then you're gonna stop, and all these levels are going to appear. You see all these levels? They are going to appear. That is how you are going to use a Fibonacci retracement. Today, I'm going to show you guys Fibonacci expansion. Don't worry, guys. I'm going to go a bit more in depth on retracement so that you guys understand, and then we can master expansion. Okay? Please take out your notebook or whatever it is. Actually, a notebook is really good. Please draw a V with a shorter end. Okay, it is so important to be able to identify this. This will help your trading by a lot. Okay, I promise you, you will start to see things on the chart you did not previously see. If you are someone who did not know how to use Fibonacci before this. Okay, if you're someone who know how to use Fibonacci, this is just a recap for you guys. This is just good practice. It is a good, way to validate the thing that you're already using. Okay, so I'm gonna move on to the next chart. Okay, based on our series, this is basically part 1. Okay, this is part 1. This is part 2. Part 2, we're gonna talk about expansion. Part 3, which is next week or the week after, when I take you guys again, I'm gonna do I'm gonna do extension, part 3. And then we're going to do part 4 to finish it off. Once you master part 1, 2, 3, 4, I can promise you your trading will improve tremendously. Basically, they all require you to identify different patterns on the chart. So can you guys let me know again in the chat box, what are you looking for when you're looking for retracements? Let me know in the chat box so I know you guys are following me and you guys are paying attention. What pattern are you looking for when you go on a chart and you want to chart a Fibonacci retracement? What pattern are you looking for? Don't be shy. Let me know in the chat box so that I know you guys are following me. This is a very simple topic, but a very, very powerful topic. That's right. Okay, so you are looking for a V pattern with a shorter end. V pattern with a shorter end. Okay, that's a good way to see it, turquoise. You can also say they're looking for a trend line with a reversal, right? A trend line with a breakout. Okay, basically you are looking for a V pattern with a shorter end. Okay, for today's topic, which is expansion, we are looking for a N pattern. Okay, we are looking for an N pattern. For retracement, it is a V with a shorter end. If it's the other way around, it is a V, opposite V with a shorter end on the other side. Okay, expansion is basically a N pattern. Do you see? It's showing a N pattern. Okay. Projection and extension, I'm not going to talk about it this webinar because I do not want to spend time on that this webinar. We will talk about it the next time around. Okay, let's move on. The last thing you want to talk about is confluence. Confluence is when you have mastered part one, part two, part three, part four, and then we're going to combine everything together. And then we're going to combine everything together. And you guys can you can use all of it and then you can find a really good setup. Okay, so an explanation for the confluence is Fibonacci confluence is when you line up multiple Fibonacci levels together to come up with a strong area where they are quite close to each other. From there, you can play contrarian trade reversal by either playing a bounce or a reversal. Okay, I'm gonna move on. Okay, recap of Fibonacci Masterclass Part 1, which is basically the retracement. Okay, so once you have identified your V pattern with the shorter end, okay, the V pattern with the shorter end, if it's the other way around, it will look like this. Okay, these lines are going to come up. Okay, these lines, do you see the blue lines? Is going to come up. For Fibonacci retracements, we look at 5 key levels. 5 key levels. Please remember these levels. The levels are above 0%, but below 100%. Okay, so they are within 0 to 100% range. Okay, so these are the 5 patterns that you guys will want to focus on. I mean, 5 levels. The first level is 23.6%. Second level is 38.2%. Third level is 50%. Fourth level is 61.8%. And fifth level is 78.6%. If you guys are still confused, don't worry. Later, when we go on to the live charts, it's going to make a lot more sense. Okay? Later, when we go on to the live chart, it's going to make a lot more sense. But at this current point of time, I just need you guys to remember these 5 levels. I am going to erase everything in case you guys want to screenshot or take a picture or whatever it is for your own reference. Okay, I'm gonna leave this here for like 10 seconds and then we're gonna move on. Okay, so 1, 2, 3. Okay, everyone has keyed in this level and remembered this. This is very important. Okay, thank you guys. Thank you so much. If you do not remember these levels, you are gonna have a hard time trading. Trading has a lot to do with like collecting factual data. Okay, so these numbers are the numbers that we at our research firm here have realized that price tends to bounce off these numbers very frequently. Okay, if you go to another webinar, if you go to another trading person or something, they might give you different numbers. They might tell you there are more than 5 numbers. They might tell you it's less than 5 numbers. But here, what we have realized is that these 5 levels are where price bounce off the most. Okay? If you are still confused, do not worry. We will get into it later. Okay, so what are Fibonacci expansion? Remember, guys, the one that we were talking about was the topic for part 1, which is retracement. We are now going into part 2, which is today's topic, Fibonacci expansion. So what are Fibonacci expansions? Fibonacci expansion, I'm just going to do a really quick history and a really quick introduction to it. Okay, the concept of Fibonacci expansion or retracement, or basically Fibonacci in itself, is a sequence introduced by Leonardo of Pisa. Okay, they call him Fibonacci in his book Liber Abaci, which was published in 1202. Okay, this sequence, it has been applied in various fields, including financial patterns, to identify potential support resistance levels based on the golden ratio. So the golden ratio always focuses on this number, 1.618. Those who are confused, do not worry. When I learned this for the first time, I was so confused as well. I don't know what's happening. I don't know who Leonardo of Pisa is. I don't know all these numbers. This is not important. Okay, this is just a quick history. Honestly, it's not very important to your trading, but I'm just going to talk about it so you guys have a little history of where Fibonacci came from. Okay, so the reference of the golden ratio in nature and human-made structures are led to its incorporation into trading strategies. The widespread use of Fibonacci-based tools in the market means that many traders anticipate price movements at these levels. So every time it comes to this level, which is 1.618 or 618, price tends to like move. It tends to react. That we don't know why, but it's they say it's a self-fulfilling prophecy, and also it's a psychological thing. Okay, so as a result, price often react at Fibonacci levels, reinforcing their significance in technical analysis. They really do always react. We have done so much back testing, and we have noticed that a lot of times price just acts on Fibonacci. Okay, so moving on. This is what expansion is. So remember, for retracement, we are identifying this pattern. For retracement, we are looking for this pattern, which is a like inverted tick, right? For Fibonacci expansion, you are identifying an N pattern. Okay, it looks like this, an N pattern. Please pay attention because this is so important to mastering Fibonacci. Okay, it is an N pattern. So once you have identified an N pattern on the charts, what are you going to do? You're going to take the first point here and the second point here, and then you can pull it and it will show levels here. These levels are important so that you know where price is going to react off. Okay, so the first thing you want to do whenever you are using Fibonacci is to identify the patterns. Remember, for retracement is like this. For expansion is an N pattern. Okay, why I draw the N sideways rather than a normal N is because this N pattern has certain criteria. Okay, this third point here cannot surpass the first point. Okay, there are a lot of rules when it comes to, not a lot of rules, just some rules when it comes to Fibonacci. This pattern here, 0.3, cannot go below 0.1. Okay, 0.3 cannot go below 0.1. It is the same if it's inverted. 0.3, this is 0.1, 0.2, 0.3 cannot go above 0.1. If it goes above or below 0.1, it means that it is not an expansion anymore. Okay, that is called, we are going to use that for Fibonacci projection, for example. So it needs to retrace at least 50%. So it needs to form this pattern, an N-looking pattern, but it looks like an N, but it's not really an N. Okay, so once you pull 0.1 and 0.2, you're going to get levels here that comes out. There's only two levels that we're going to focus on. The first level is 27, negative 27.2. The second level is negative 61.8. These are the two levels you want to focus on. Negative 27.2 and negative 61.8. So for Fibonacci expansions, levels are below 0%. They are negative levels. Hey, by the way, guys, if you guys want to research on like Fibonacci expansion, right? Here at our research firm, we call it Fibonacci expansion. But if you go elsewhere and you try to like deep dive and research, they call it negative Fibonacci extension. Okay, so it's just names. It doesn't matter. More importantly, you need to remember the numbers. Okay, as long as you're following ours, then just follow our numbers because everyone has a certain different numbers. Why? Because every trader is doing back testing, right? Maybe another trader is noticing something that we did not notice. We are noticing something that other traders did not notice. So what we have noticed is that negative 27.2 and negative 61.8 are two levels that price tends to bounce off. Okay, so number one, you need to find an N pattern. Number two, this 0.3 cannot pass 0.1. Number three, 0.3 need to at least retrace 50%. So if this is $0 and this is $10, 0.3 need to have pulled back to at least $5. Okay, everyone understood? Everyone following? If anyone needs me to repeat anything, please let me know in the chat box. Do not be shy. Very simple topic to master. It's not very hard. It's just that there's a few things you need to remember. Other than that, once you have mastered this, please know that it will help you so much in your trading. If you guys have any questions at all, ask me in the chat box. Do not be shy. If you need me to repeat, don't be shy, because the whole point of this webinar is for you guys to learn. Okay, so they focus on the negative levels. Cool. Everyone good? Seems like everyone's good because I don't really have any questions or anyone bringing any concerns up. Okay, I'm gonna move on to the next page. Okay, this is basically, give me a sec. I'm gonna move my bar. I cannot see my screen. What it is, okay? We're gonna pay attention. It is doing a N pattern. See, N pattern. You're gonna get the starting point here. This is what it looks like on the charts. So far, fine. Okay, thank you so much for responding. Do respond, guys, if you can, so that I know that you guys are following, and like, actually more importantly, so that I know that my audio is working. Okay, so if I ask question and you guys are answering, then I'm like, okay, you guys can hear me, everything is fine. Because there was this one webinar that I did where I was talking for like 10 minutes and nobody said anything, nobody responded to anything. I'm just like, okay, maybe this is just a very quiet group. Nope, it turns out my audio wasn't on and I was talking to myself for 10 minutes, right? So do let me know in the chat box, okay? Don't be shy, just interact with me. Okay, so you're gonna take the first starting point here. You're gonna identify an N pattern first. We have identified our like reverse N pattern. You're gonna get the start point, and then all these numbers are going to appear, and you're only going to focus on negative 27.2 and negative 61.8. Okay, these are the two levels that you want to focus on. Okay, this is what it looks like on the chart. If you guys are still confused, do not worry. We are going to the chart. I think I said earlier that we can do like a practice session at the end if we have time, but I think more importantly, I really do want to do a practice session, because then you guys will be familiar, you guys would know how to do it. Okay. How are they different from Fibonacci retracement? We already know the difference. The difference is that one is like this, and the other one is an N pattern, right? Or it could also look like this. Sorry. Yeah, basically it is an N pattern, or the other way around. It looks like this. Okay, the difference is the pattern that you are identifying. The second difference is the levels. Can you guys let me know in the chat box? I'm not going to tell you guys the answer. Can you guys let me know the 5 levels that we focus on for Fibonacci retracement? If anyone was taking notes at all, please let me know in the chat box the 5 levels that we focus on for Fibonacci retracement. So that we know the differences. Anyone? Okay, thank you so much, Brian. It is 23.6. Gotta take out my pen again. No, wait, actually, I should take out, okay, never mind. 23.6, 38.2, 50%, 61.8%, and the last one, anyone? Okay, 78.6%. This looks at positive levels from 0% to 100%. Fibonacci expansion, on the other hand, only looks at two levels. The two levels are negative 27.2 and negative 61.8. Okay, they are lesser than 0%. Only two levels. Okay, everyone clear so far? I'm gonna move on. Finding Fibonacci confluence. Basically, it's combining Fibonacci retracement and Fibonacci expansion together. Okay, we're gonna look at that in the charts. Finding reversal strategy. Okay, so same. You're gonna find Fibonacci expansion first. Since you already found that, these levels are going to appear. Okay, these levels are going to appear. Based on Fibonacci, you are going to assume that price is going to move to one of these two levels, and then it is going to bounce. Okay, so here you get in for your buy entry. Please mention the key levels are 2. Yes. If the chart reaches it, when should we enter the market? Okay, thank you for your question, Tukwasi. I will show you in a while. You just need to know that when price comes to either one of these two levels, that's when you need to get ready to get in for a possible buy. Okay, possible buy. Do not get in first. Okay, so I'm done with the explanation. We are going to go in the intensive practice so that you guys can know how to use Fibonacci. I know it's very confusing for some of you, especially if this is your first time learning. It'll make more sense when I go to TradingView. So give me a sec to go to TradingView. In the meantime, do read the risk warning. Everything I teach or share here is purely educational. Okay, so give me a moment to pull out TradingView. Okay, cool. Can you guys see my screen? Can you guys see my TradingView screen? Yeah, okay, cool. We're gonna go on to XAU USD, for example. We are going to go on to, we're gonna do some back testing now, and we're gonna do, we're gonna do back testing. Okay, some of you are saying you can see my screen, some of you are saying you cannot see my screen. Can I just double confirm if everyone can see my trading view screen at this current point of time? Everyone can see my trading screen at this current point of time? Okay, cool. Thank you so much. Hey, Juha, we're not, okay, I can do it on oil, it doesn't matter. Is there a particular oil that you want me to look at? Brent oil. What is the code for that? Okay, let's do Brent crude oil. UK oil. Okay, first things first, we need to identify the pattern. Remember, today is a practice session. We are not doing analysis, we are purely doing practice. Let's identify how to look for Fibonacci retracements. I do not see a Fibonacci. Let's take current price, okay? We are on the day chart. How you use Fibonacci retracement is you identify the V. Remember the V with the shorter end. Okay, do you guys see it? There is one right here. This is a Fibonacci retracement. Do you guys see it? Cool. Okay. Another thing that I also see is a Fibonacci expansion. So we are lucky I immediately see two patterns. Remember, the only catch is that 0.3 cannot pass 0.1. Okay, so if we look closely, 0.3 actually did not pass 0.1. So we are so lucky that we have caught Fibonacci retracement and Fibonacci expansion at the same time. So for Fibonacci retracement, which is this, the V, what we're gonna do is go to Fib retracement. Do you see the one? 1, 2, 3, the third one. Press on Fib retracement. Pull from 0.1 to 0.2. I'm gonna make it bigger so you guys can see what I'm doing. Is it clear? You are going to pull from 0.1 to 0.2. I'm gonna repeat that again. When you go on a chart and you want to plot Fibonacci, you are going to identify the pattern first. So there is a Fibonacci retracement here. How do you identify a Fibonacci retracement? It is a V pattern with a shorter end. Okay, it can also look like this, which is the other way around. A V pattern with a shorter end. Okay, so we have found the V pattern with a shorter end, which is basically this. We are going to take 0.1 and 0.2 to get 0.3. Okay, how do you get 0.1? You go to the third one, you press on this and you press Fib retracement. Okay, so we're going to pull 0.1. Oh, sorry, I'm on the, I didn't log in, so, okay. Sorry guys, give me 1 minute to log in. Give me 1 minute to log in so that that doesn't keep popping up. Sorry. Need my phone to log in. Just give me a sec. Okay, I've logged in. We shouldn't have a problem anymore. Okay, cool. So we have identified the pattern. We are going to use Fib retracement pull 0.1 to 0.2, and then you see all these levels coming out. Okay, can you guys let me know in the chat box what are the 5 important levels for Fib retracement? That's why I was telling you guys it is so important to remember the levels. You need to remember the levels to be able to use Fib retracement. If you don't remember the levels, it will be harder for you guys to use it. Anyone at all? Anyone has the 5 levels? Okay. You need to go to the settings. How do you go to the settings? You just double click. And then we need to only click the 5 levels that are important. That's why the levels that I was talking about earlier on is so important. If anyone remember or wrote it down, please let me know in the group chat. Okay, the first level, thank you so much. 23.6. 23.6%, which is 0.236 is the first level that you want to focus on for Fibonacci retracement. Second level, 38.2%. Third level, 50%. Fourth level, 61.8%. And the last level is 78.6. Okay, so again, Fib retracement, 5 levels is 23.6%, 38.2%, 50%, 61.8%. Sorry, didn't put numbers. And the last level is 78.6%. Okay, please remember these 5 levels for Fibonacci retracement. Okay, so now that we have identified our five level, why is it useful for it? Why do we even need to know these 5 levels? Ideally, when price comes to one of these 5 levels, 1, 2, 3, 4, 5, it should turn. Okay. Okay, so price already went to 23.6, it didn't turn. It continued to 38.2, it didn't turn. It continued to 50%, it didn't turn. It continued to 61.8%, it didn't turn. And now it seems like it is turning on 78.6. And this is where you enter for a sell. Okay, that is how you use Fibonacci. Fibonacci's use is to help you identify levels that is the possible sell or buy entry when you are trading. That's why it is so important to master Fibonacci. Okay, because all these other levels does not apply to us, we're going to get rid of the levels. Okay, so we're only left with 78.6%. Okay, before you jump into conclusions and get into a sell, the first thing you want to identify is trend. Whenever you are doing analysis, you need to do trend. The trend currently is a downtrend because it's making lower highs and lower lows, right? It is literally doing that. Therefore, there is a possibility of price bouncing from the 78.6%. Okay. To make our evidence even stronger, our analysis even stronger, what are we going to do now? We are going to identify Fibonacci expansion, which is the N pattern. We are going to get 0.1, 0.2 to help us find where 0.4 is going to end. When you think of Fibonacci, just think of it as a ceiling. Okay, so when price comes to this ceiling, it will have a hard time breaking this ceiling. And when it has a hard time breaking the ceiling, what is it going to do? It's going to do a U-turn. And when it does a U-turn, this is where you can get in for a sell. Okay? So based on Fibonacci expansion, which is the N pattern, we are going to take this point and this point here. We're going to go back to the same thing, Fib retracement, press on it, click on it, choose the lowest point that you see here, the lowest point, pull it to the highest point here, and then we're going to go in and look for the two important levels. Can you guys let me know what levels do we focus for Fibonacci expansion? There's only two levels and the two levels are negative. Please let me know in the chat box what are the two levels we focus on for Fibonacci expansion. I'm going to give you guys like 1 minute to refer to your notes, and then you guys let me know in the chat box, and then we can key it in together. Thank you so much, Cleon. Negative 27.2 and negative 61.8. Okay, so now we don't see any negative here. It's okay. You just type it in yourself. So click on one of this, delete it, and type negative 0.727. Why is it 0.727? Because it's 27.2%. So based on 1, it is 0.272. And then the other level is negative 0.618. Okay, click on it, and then it's going to appear on your charts. Okay, so based on the charts, the two levels is here. Here is one here and one here. Okay, that means when price comes to this level, we expect it to turn. We expect it to turn. Okay, so we don't know if price is going to come there, get to that level, but ideally what we want to happen is, ideally in the very ideal situation, negative 0.27 is going to line up exactly where the 78.6 Fibonacci retracement is. So when multiple Fibonacci levels line up at the same area, you know that this area is a strong area, and that's where you get in for a sell. Okay, so right now we have already identified where our levels are. We have identified that there is a 78.6 Fibonacci retracement at this level here, right? We have identified there is a negative 27.2 Fibonacci expansion here and a 61.8. Negative 61.8 expansion there. That means whenever price comes to one of this level, we expect price to do some kind of reaction. Okay, when the reaction happens, that's where you get in for a sell. Okay, it's not obvious here on the 1 hour, sorry, the daily chart, but when I go down to 4 hours, you will see how beautifully this worked. Can you see? Price moved. Price moved. The minute it touched the 78.6 Fibonacci retracement, do you see that there's a little bit of pullback there? Okay, it's gonna be even more obvious on the 1 hour chart. Okay, there you go. If you know that this is going to happen, what are you gonna do? You are going to enter this area for a sell, and then you are now in profit. Okay, that's why Fibonacci retracement, Fibonacci expansion, Fibonacci projection, Fibonacci extension are so important. You need to master it to know where price is going to go and where price is going to react off. You are using Fibonacci to get in for reversal patterns, okay? You are using Fibonacci to get in on reversal trades. You cannot use it for breakouts. It's only for reversals. Okay, so it's gonna come here, touch this, and then it's going to reverse. When it reverses, that's where you enter for a sell. You guys see how nicely this played out? Let's find another example. These are just examples, okay? Okay, so I see another Fibonacci retracement here. I'm gonna change this to a different color so you guys, okay, never mind. I'll just use black. Okay, Fibonacci retracement here. It's an opposite V. Do you see it? Opposite V. You're gonna take 0.1, 0.2 to get 0.3. That's exactly what we're gonna do. We're gonna take the Fib tool, 0.1, pull it to 0.2, go into the settings, delete everything, and only pull out your important levels. Can you guys let me know? Best time frame to use is 1 hour. Okay, it depends what kind of trader you are. If you are a day trader, 1 hour is a good time frame to use. If you are a scalper, you can use 5 minutes, 15 minutes. If you are a swing trader like me, I usually look at 4 hours daily chart. Okay, so it depends what kind of trader are you. Are you someone who takes a lot of trades in a day? Are you someone who trades once in a while? Are you an investor? It depends. That depends on your lifestyle. Okay, that is a very important question you need to ask yourself. Okay, so I'll give you an example. I am actually a mother of 2 young kids. I have 2 toddlers. They are both below 2 years old. So my life is very hectic. I'm always running around for children. I have multiple businesses, so I'm very busy also running my businesses. I also do these webinars for you guys. I also do a lot of other things on the side. Okay, I do few things on the side. So I'm a very busy person. Therefore, it is not possible for me to sit in front of a computer and look for trades every day. Therefore, I am a swing trader. Because I am a swing trader, I only look at 4 hours and daily chart. Weekly is a bit too much already, okay? But 4 hours and daily chart. Usually my trades will last somewhere between 2 days to 1 week. 2 days to 5 days maybe, okay? So because my lifestyle only allows me to come and trade once in a while, maybe 1 time a week. If you are someone who is a bit more available, you have a bit more free time, you can look at the charts more frequently. You can look at the charts every single day. You can look at the 4 hours, the 1 hour, and even the 15 minutes. Okay, so it depends on your trading style. Okay, can you guys let me know in the chat box? I'm going to do one more last one and then you guys, I hope you guys have a gist of how this works. Can you guys let me know in the chat box what are the 5 key levels for Fibonacci retracement? 5 key levels for Fibonacci retracement. Thank you, Cleon, for asking your question. 5 key levels. We'll do it one more time and then I have to end the webinar because we've run out of time. But yes, please let me know the 5 key levels. This is very important. I'm constantly asking you guys about the levels because this is the important thing that you need to remember. It is the key levels for every kind of Fibonacci. You first need to identify the pattern, remember the key levels, and then you can see what to do from there. But if you don't remember the key levels, then you wouldn't know how to use Fibonacci to begin with. Thank you so much, Cleon. 23.6, so 0.236, 38.2. 50%, so 0.5, 61.8%, and 78.6%. We're going to click on that and we're going to see what comes out. Gonna make this a bit further. Would that work? Yes. Okay. No, maybe a little bit more further so that we can see. By the way, if you guys are trading, do get good at trading view. Okay, so remember the pattern is to look for the inverted V. Why do we use Fibonacci again? One more time, I'm just gonna remind you guys. So that every time price comes to one of this level, we expect it to bounce. If it doesn't bounce, means that it's going to travel downwards some more. And then we expect it to bounce at the next level. It doesn't bounce, it's going to travel downwards some more, and then downwards some more, and downwards some more. And then we expect it to bounce at one of this level. So one of this level is your ideal buy entry. Okay, one of this level is your ideal buy entry. Okay, we don't know which one is the exact number. That's why we're going to narrow it down. How we're going to narrow it down? We need to keep our charts clean and nice. We're going to get rid of 23.6 because price already passed 23.6. So we know that price is not going to bounce at 23.6. We're going to get rid of 38.2 and we're going to leave 50%, 38, 61.8%. And 78%. Okay, so there's a possibility price will come to one of this level and turn. Okay. Which level do we know is it going to turn to? That is for another webinar, but basically you need to know how to even get these levels first. So today we're just going to focus on how to get these levels. Then on maybe one of the webinars when we have time, a bit more time, I'm going to show you guys. Do you look for confirmation on lower time frame before entering, or do you set a sell limit? I do look for confirmation on the lower time frame. When I am trading, I do look for confirmation on lower time frame, depending on the strategy I'm using. If I'm using a breakout strategy, I'm going on the lower time frame to confirm certain things. Same if I'm doing a reversal, I'm going to use the lower time frame to pinpoint my entry. Okay, thank you for asking that questions. That's why depending on how you are trading, you need to have two time frames. I'm a swing trader, so I use 4 hours and the daily chart. If you are a day trader, you can use the 4 hours and the 1 hour, or the 4 hours and the 1 hour if you are a day trader. If you are a scalper, you can use the 1 hour and the 15 minutes. So you need two time frames. Where would you put stop loss and take profit? Oh, that is a webinar. That is information for an entire webinar. I can do an entire webinar for stop loss and take profit. But basically, your stop loss should be below and above the next zone, and your take profit should be below or above the next zone. Okay, so everyone good? Everyone knows how to use Fibonacci retracement and how to identify Fibonacci retracement, Fibonacci expansion. If everyone's good, I will catch you guys. Take profit at next Fibonacci level. Yes, something like that. I don't have enough time to show you how, but yes, something like that. You can use Fibonacci levels to get your take profit as well. Okay, so for example, you entered here for a sell. Right now you are in a sell trade. Where do I get out? Where is my exit? You can use one of these Fib levels as your exit, as your take profit. Okay, you can use one of these as your take profit. So Fibonacci is very, very important because Fibonacci will identify where price is going to react. And where price is going to react is your entry, is your take profit, and your stop loss. Okay, so that's all I have for you guys today. I hope you guys kind of have a rough idea. I totally understand if you guys are still confused. It will take a while for you to master Fibonacci, but I promise you, once you master Fibonacci, you will get a lot better at trading. Okay, I will see you guys next week, or I think the week after. I'll classify myself as a trader like you with busy family life. Same. I am very busy. That's why I'm only a swing trader. So after this, I will go on to the 4 hours chart. I'll go into the daily chart and look at possible setups. And then I will put in a sell limit or a buy limit. And then if I have time, I'll go and do confirmation. But yes, because of how busy I am, I don't really have that kind of time to go and like stare at the chart all day. But if you do, um, you can look into like scalping. Okay, thank you so much, everyone. I will see you guys next week or the week after. I cannot remember my schedule, but hopefully you guys kind of have a rough idea of how Fibonacci works. Just remember, you need to identify Fibonacci levels because Fibonacci levels will be used for your entry, your stop loss, and your take profit. Okay, Fibonacci will help you come up with a trade. But to come up with a trade, you first need to master Fibonacci, along with other things like support resistance. What time of the day do you trade? I trade any time of the day as long as my requirement is fulfilled. I will show you guys that list again. I have a list that I follow. There it is. This is the list that I follow. Gonna make it bigger so you guys can see it. If everything on my list is fulfilled, right? It doesn't matter what time it is. I check this, I check this, I check this, I check this, I check this. It doesn't matter what time it is, as long as everything on my list is fulfilled. Not everything, majority of the things for my list is fulfilled, I will enter the trade. Okay, so this checklist is important as well so that you can use it to get in on your trade. Okay, thank you guys. I'll catch you guys again next week or the week after. Take care. We are like 10 minutes overshot already. Okay, thank you, Alex, Emmanuel, Joseph, Juha, Justin, Cleon, Obioma, Oliver, Vivian, Brian, Bob, Joshua, Kieran, and Muhammad. I will see you guys soon. Take care. And thank you for joining my webinar. Okay, bye guys. How do I how do I stop the webinar? Hold on. Okay. Bye guys. Catch you guys again.